Good morning. This is Mike Wade here coming to you live from Costa Rica. Welcome to High Probability Short-Term Profits. That's a mouthful, but when you grab the probability of this system, you're going to be very happy you did. Remember, our system is all about getting on base. Moneyball, the movie Moneyball, where they went out and got batters that could just get on base. They weren't looking for home runs. They just wanted to get on base, get on base, get on base, get on base, make about 10% every time. And average hold time is about 7 days. That data is running consistent for almost 2 years now as I've been doing this live show. So that's this game. It's fast, and we're going to place a live trade today. The agenda for today is we want to take a look at the markets. There's a lot happening. It feels like Chicken Little is happening all over again. Markets are coming down pretty hard. We want to take a look at that today. We want to look at last week's show on CarMax. We placed 2 trades. One got filled on CarMax. I want to show you how that trade worked out. And then we're going to do our sniper guidebook giveaway. So that's the guidebook that allows you to come and join me every Thursday at 9:15 Eastern Standard Time, New York time. And we place trades live here while the markets are happening. So that is this game. And then I have a new trade for you today on a market. We're going to trade a non-bullish prognosis on the market. All right, that'll make more sense in a few minutes. And of course, if you have any stocks you want us to look at, please pop them in the chat box right down below here. And my brother from another mother, Ryan, will kick in, and we will take a look at your trades as well. Ryan, how you doing this morning, man?
Doing pretty good. Enjoying this nice, beautiful weather over here in South Carolina.
South Carolina, man. Yeah, it's springtime in the South, right?
Oh, yeah. Lots of pollen and warmer weathers.
You know, I went to high school and college in North Carolina, and the pollen, and even Atlanta, I lived in Atlanta for a while. The pollen is crazy. Everything gets coated in yellow dust, and it's wild, man. All right. Well, we want to talk about the markets, and if you've been with me or with anybody that knows anything about the markets, you know what's going on. Inflation is still too high. And so the Fed over the last year and a half has been raising rates. And then since about January of this year, the market began to expect rate cuts. In fact, Powell, the Fed chair, hinted as much, said as much in the last Fed meeting. And then what's happened since is the markets have been rising. And then all of a sudden, we had Michelle Baumann come out, one of the Fed governors, and she said, well, inflation isn't going anywhere. I think maybe we might have to, hike rates. And then Powell came out last week and said, you know what? He said it in Fed speak, but inflation's not dropping. And so rate cuts, the hope of rate cuts is being dashed, and that's being reflected in the markets. I like this quote here, to be or not to be, that is the question. And then the Fed is pondering to cut rates or to not cut rates. That's their question. And maybe a new question is, should we hike rates? Now, we do have a Fed meeting coming up the last day of this month, April 30th, which is a Tuesday. And then on May the 1st, we'll get some sort of announcement about interest rates. Likely they'll stay the same, but maybe now we get a rate hike, and then the markets will be waiting for Powell to speak at 2:30 on May the 1st and have him tell us when he thinks the timing of these rate cuts is coming. Some are saying now it's 2005. So we went from 3 rate cuts, maybe 1 in June by the end of the year, 3 rate cuts by the end of the year, and now the dialogue is shifting towards not doing that at all this year, and maybe even hiking rates. So what does that do to the market that's expecting rate cuts? We're going to get rate cuts. We're going to get rate cuts. Yay. The market runs up. And then Baumann comes out and says, maybe a rate hike. The party might be over. And then what's happened since is the markets have come down really hard. All right. Big red bar, big red bar. Yesterday, we went all the way back down to 500. This chart is the S&P 500 ETF, the SPYs, all the way down to 500, which correlates to 5,000. That was breached here very significantly, and that party is now over. This trend is broken. You could call a bounce. I don't see a bounce. There might be one. If you're bullish on stocks, you have bullish positions. I would say more likely from here we get further downside. The key level here on the SPYs will be 500. We close below 500. Watch out below. We could come down to 475 or even the 200-day average, which is the blue line right there. So it's crazy times. And, I've got to tell you, when markets correct, and we've started a correction, will it continue? I think so. It's a very prime credit spread environment. And so in just a few minutes, we're going to take a look at trading the markets not rising. I think they're going to drop. They might bounce a little bit, but we're going to play market top and put on a high probability credit spread that will expire before the Fed meeting. The other thing I want to talk to you about is gold. Gold, this is the ETF that tracks gold. Gold is rising while the markets are correcting. Okay, that's called risk off. Risk on assets are stocks. Risk off assets, risk off implying less risky assets like gold, silver, precious metals, maybe bonds. Bonds are really sensitive to interest rate adjustments. So bonds are, we may see money flowing into bonds. Don't see any evidence of it just yet. So gold's rising. Risk off. More evidence to support bearishness from here. So we're going to come back to this in a few minutes. We've got 8 minutes before the market opens, and I have a trade I want to share with you on the diamonds, the DIA, the ETF that tracks the S&P 500. Let me show you CarMax. We placed 2 trades last week. One of them was on Love Shack. That one didn't fill, but the CarMax one did. Remember, what we did was CarMax came out with bad earnings. All right, on big volume, the stock tanked. And during the time we were in the show, the stock vacillated a bit. We set our line in the sand at 78. We want to make money anywhere below 78. That's the simple way to say it. We had multiple resistance levels to keep the stock from rising to 78. We make money anywhere below 78, down, sideways, up. For us to get into trouble on this trade, the stock would have had to have risen above 75, the 200-day average, and then maybe up to 78. Super duper high probability of profit. So and by the way, we placed the order in the morning for 10 cents, and it wasn't worth 10 cents in the morning. And then during this little bump up here, we got our fill. We let the trade come to us. And this is what we ended up doing here. We sold the April 26, 79 call and we sold the 78 call, bought the higher call. That was a credit spread. We did it 5 times. We pulled in $50 of credit for $450 of max risk. That, if it expired worthless, which it would anywhere below 78, that's an 11% return. Now, our rules are that you close down the trade for 10% of the original credit. So that's what we did. And that order was a GTC order that filled automatically, and that filled 4 days later. And what we ended up with on this trade was a $45 profit on $450 of original risk. That's 10%. Take off a percentage point for commission. That's 9% over 4 days. Now, normally it's a 7-day hold time. And that's this game. All right. Now, you need a guidebook, I think, for you to be able to follow along, understand what I mean by lines in the sand. What's a credit spread? What's good news? What's bad news? How do you manage these trades? And the Sniper Guide is available to you. You can click the link below. It's a free guide. So I encourage you to grab it, read it. Simple. It's simple when you know how to do it. And it's, I think, organized quite well and comprehensively. And that will allow you to trade alongside me every Thursday morning at 9:15. Ryan. Ryan.
Yes.
Our wins. I hate talking about win streaks, but we got to talk about it. We've had 13 straight winners now.
13.
The average 13. 13 for 13. We've our average gain is 51 bucks, and we've had an average trade length of 4 days and an APL of 13.75%. So one way you can think about that is we're making 13.75% every 4 days. You could take, for example, if this whole time holds, and it does, 7 is average. So let's say you take $374 or $500 or $100, and you trade it every week, the same money every week, week 1, week 2, week 3, week 4, and you're able to make 10%. We're making 13 on our streak. But if you make 10% every week, I can tell you that's 40% in a month. So these returns per trade are small, but because we win so frequently, we lose 1 out of 10. We have one coming. It's going to happen. I'm going to do everything I can to avoid it. And then we're just going to keep the system rolling. So, Ryan, we're doing really well, and I have no intentions of stopping. Okay. We got 4 minutes. That's enough time. Check out the diamonds. The diamonds are an ETF. The DIA is an ETF that tracks the Dow Jones Industrial Average. And look at this here. That there is all-time high. And then we had Michelle Baumann. Rate hikes, maybe. And then we cracked below this 390 level. And then came up to the 50-day average, which is the red line, and then Chicken Little. Now we're bouncing off about 375. Let's take the futures here. The futures are anemically up. The Dow's up a little bit. The S&P up a little bit. The NASDAQ up a little bit there. So the Dow's up 0.31%. That's good because that's going to allow us to get a bit more credit. So here's the idea. I want to make money anywhere below 390. And I want to do it before April the 30th or May the 1st, specifically, when the Fed meets. So here's the trade. My line in the sand is 390. I am leaning on this correction, the big red bars and many red bars, only one little green bar. Lots of selling, and the volume as well down here. Volume for me is institutional conviction. All right, what does that mean? Well, remember, institutions control 75, 80% of the market, depending on the market. And so if you get a lot of selling, you can pretty much say it's institutional selling. And if there's volume, big volume, it's institutional volume. So I think of volume as institutional conviction. And so when I look at this chart with that conviction, with that distinction, I can see institutional conviction dropping. The conviction is revealed by the high volume. Lots of big red volume bars in the green, not so high. So all of that tells me that more downside is quite likely. We could get a bounce. If there is a bounce, I'm not expecting us to get above the 50-day average. Hell, I'm not expecting us to get above, these other levels as well. 380 is tough. 385 is right about here. 390. So that's my prognosis. And why would the markets bounce with the Fed coming out, Powell coming out, saying, well, inflation's not going anywhere, and then Baumann coming out and saying maybe a rate hike? We may see something new on May the 1st. So until now and then, I want to put on a trade that makes money anywhere below 390. So here's the trade. All right. We're going to sell to open. This is the DIA. That's the stock symbol. It is a stock. Happens to be an ETF that tracks the Dow Jones. Sell to open the diamonds, April 19th. That's the last expiration before the Fed meeting. We're going to sell the 203 call and buy the 204 call. And I'm going to try for 10 cents. Here. Let's get it here. Oh, I'm looking at the wrong one. So the diamonds, let me put the right one up here. So let's go to the diamonds, and I'll redo that. I was actually looking at the IWM as well, which is another great trade as well. So I want to sell at 390. And when you come into your broker's platform, I was looking here and I said, all right, well, Fed meets on May 1st. I don't want to be in this trade on May 3rd. I don't want to be in this trade on May 1st. So what I'm going to do here then is select April 26th, an 8-day credit spread. And the line in the sand, which I told you wrong, the line in the sand here I want is 390. So in this case, as long as the DIA stays below 390 by a week from Friday, we're going to make some money. How much? That's the question. Let's take a look. So if I go to the option chain here, I'll find 390. Oh yeah, there's some cash there. Now it shows 8 cents. No, actually, let's go to, I'm at the wrong one. Let's go to 390. It's showing 6 cents. Okay, so there's not enough. If I sell at 390 right now, there's not enough credit. I can see the diamonds has kind of done nothing. The diamonds is about, well, it's up a little bit. Not much of a move on the diamonds yet. So the only way we're going to get any decent credit at 390 is for the stock to come up a little bit during the day. Currently, I'm only showing 6 cents. And then the next choice would be, well, what if I came down lower to 389, just keeping an eye on the credit? No, I need 10 cents. That's my minimum. So I'm stepping the line closer to the heat. We could get a trade at 388, 389. And so the question then becomes, is that too close? Let's see. If I sell 388, let's zoom this in a little bit so I can see it. Yeah, 388 is right at the 200, the 50-day moving average. So that could be interesting, a little closer than I'd like. But you can see here that this line in the sand corresponds to resistance there, support, resistance, support, resistance there, support there. So this one looks pretty good at 388, 389. So here's what I'll do. I'm going to put an order in at my original strike at 390. All right. And I'm going to ask for 10 cents. I'm just going to throw that in there. This is going to be, we got lines in the sand. We also have hooks in the water. I'm going to ask for 10 cents. There's nothing there. And then I'm going to go take a look at the other index, which is kind of where I was leaning as well. One of the other ones I like. And this is on the IWM. Actually, I already have that chart. Let me put it up here. So the IWM is the Russell 2000. So let's pull that one up here. And the Russell small caps, the two smallest market cap stocks. And now this one is dropping like it's hot, man. Boom, boom. Institutions are dumping small caps. Are quite a target. So then I can start looking at lines in the sand here as well. And let's see, 200 might be good. I'd say maybe up at the 50-day average, 205. If we could get 205 right here, we'd be in really good shape. I've got my my line drawing tools. Let me get that line drawing tool up here. There it is. I'll just do the crosshairs. All right. All right. I'm not going to be able to do that right now. I'm going to have to just show you. Here is 205. So 205 on the IWM would be a good trade as well. Let's take a look at the IWM. This is my favorite strategy to do in these bearish markets. All right. Now, what I can do here is, remember, the Fed is meeting on May the 1st. We want to be in and out before May the 1st. Notice here, I can do 12-day options. Okay, so let's go here. And so the idea here is this trade will expire before the Fed speaks. I don't want to be in May 1st because the Fed speaks first. So I'm picking options that they expire the day before the announcement. So let's see what we got here. I'm going to see if I can sell at 205. What would that mean? It'd mean that if the IWM rose, it would have to bust above 195, above 200, above and then 205. So lots of bullishness would have to ensue. The question becomes, of course, do we have any premium there? And I'm having a trouble with Thinkorswim here. This is the Thinkorswim simulated environment. Let me see if. Hey, Ryan, am I still here? Do I still have internet?
Yeah, you're still good. It's kind of in and out a little bit.
All right, good. Yeah, I'm not seeing any data. That's a little. Try 26. Okay. All right, we'll see what we can get for April 26th. What about April 30? Yeah, it's not giving me data for April 30 in Thinkorswim. That's a bug. April 29. Here we go, April 29. All right, I'm looking at April 29, and at 205, I see nudge, seeing 4 cents. I need 10 cents. So then I can take a look here and see how close I need to get in order to make 10 cents. I don't want to get too close. And just looking at the prices here, I'd have to go to 202. If I did 202, then I'd make 11 cents. That's enough. So then the question is, of course, where's 202? 202 is right about there. That's a little close. That's a little me. I'm going to go up to the 50-day mooch, and we're going to make it 202. That sounds a bit subjective. Well, that is what I've got here. That is what I've got. 202 that's the 50-day moving average. All right, we'll take that one. I want 10 cents. I'm going to just do one contract and talk to you about how to size these. So I'm going to put this one in as well. We're going to go for 10 cents. Current mid price is 8. Good chance of a fill on this. So here's what we're doing. We're selling the April 29 IWM 202 call, buying the 203 call. Give it to me or not. If you don't, there's plenty of trade coming tomorrow and later today even. So I'm going to hit that out, put that out there, and check the pricing here. Now it's at 5. So let's let that sit and see if we get a fill on that today. We'll see. The IWM would have to come up a little bit. Looks like we're dropping maybe 200, but I like the 50-day average, which is right at 202. So let's just let that sit, and then the diamonds trade as well. So let me give you the trade for the IWM. Oh, it's at 10 cents. We're going to get filled on that here probably here in a few minutes. So this is the main trade of the day, the IWM April 29s. All right. And so what we just did is sold the 202 call. We're about to do is we're selling the 202 call, buying the 203 call for April 29th on the IWM. And let's see, it's at 9.5 cents. That will likely fill here shortly. That's going to be our trade of the day. The diamonds trade is not there yet. That's not going to fill unless the diamonds bounce. So let me make sure I've got it correct here. Sell to open, the IWM April 19, 202 calls. Buy to open, the 203 calls for a minimum of 10 cents. And then once you're filled, most importantly, you got to close these down. In the event there's a recovery, doubt it, but if there is one and the stock closes above 202, then you close the trade down for a managed loss, a contained loss, and then take your profits by buying the spread back for 10% of the original credit. What's the original credit again? 10 cents. Put a GTC order in to buy the spread back for 1 penny, good till cancel. And there's a very, very good chance that that will happen in a matter of days. I've been doing these exact trades in my own account for the last couple of weeks, and it's been really fruitful, let's just say. All right, Ryan, I'm hot, man. It's hot here in Costa Rica.
It looks a little toasty.
Yeah, it's the sun's coming up now, and it's starting to get a little toasty, but I like it. Do we have any student trades here to take a look at?
I'm seeing something in TSM. You haven't gone over that one yet, have you?
Not yet. No.
Not yet. Yeah, I see
Taiwan
TSM and then
Semiconductor
QCOM.
and Qualcomm. All right. Let's take a look at TSM. Ba-boom, ba-boom, ba-boom. TSM has tanked. Let me show you something as well. It's very interesting, right? I like it. I like this 140 level right there. I really love it. If I could sell at 140, I probably would. I want to check the news. But I know Taiwan Semi is in the semiconductor sector. What's your vector, Victor? Victor, vector. The semiconductor sector, the SMH. The SMH has been tanking. All right. That includes NVIDIA and advanced micro devices. Another one I know of that came out yesterday with earnings was ASML. This is another. This is provides semiconductor manufacturing, and they came out with earnings that weren't bad, and the stock tanked. So what I want to do now, then, with Taiwan Semi, go back to that chart, is I want to see what the news is. Why? Well, the whole chip sector is dropping, so that's good news. It confirms. Let's put the right stock here. It confirms.
We'll be right back. Not sure what's going on with his connection, but we'll be right back. Hey, there he
I'm
is.
here.
Hey,
Sorry
you
about
good?
that guy. There, Costa Rica has its. There's so much beauty here, and we're nice. And then sometimes electricity and internet goes out. So I'm getting a fiber line installed. It should be installed by next show. So this won't happen next week. Apologies, everybody. Pura vida, as they say here, which means, hey, don't worry. So let's put TSM here and look at Taiwan Semiconductor. What's the news? Why did the stock drop? And we can take a look here. Oh, we just got let me pause for a moment. We just got filled on our IWM trade for 10 cents. Okay, so that was filled. And now what we want to do is put an order in to buy it back for GTC. Do that if you're in that trade. And let's take a look here. Let me trying to find some clean news here. Let's see, TSMC. What I remember seeing this morning is that the earnings was good and then the stock has come down. Let's see. Okay. Yeah, I have to. I'd have to get the news, and I'm having a little trouble. News. Actually, I can get the news in Thinkorswim. Let's go to Thinkorswim and look at TSM. Right? Am I gone?
You're here now.
Oh man, I'm so sorry. I wish I could do something about it. I am getting high speed internet next week, so that's coming in. I'll have it finally installed. So the stock's come down. I need to figure out why the stock has come down. They had just announced earnings, I do know. And so what I'm trying to do here is to check the earnings and see what they said. And pre-market the earnings. Let's just take a quick look here. TSMC profit rises on demand for advanced chips. That sounds like good news. Taiwan Semi beat expectations. And they had good. This is the weird part. They had good earnings, and the stock came down. That's another. Earnings were good, and the stock tanked. So I'm not really interested in selling a credit spread that would lose money if Taiwan bounced. The earnings weren't terrible; they were good. More money's coming in, higher demand for their products, and the stocks come down. It looks to me like institutions are just dumping and rolling out of semiconductors. And because the news is mixed like that, as much as I'd like to sell a credit spread on this one, I would avoid it. It just doesn't make sense. And again, it does put more of a bearish slant on the markets. In fact, I would take a look at the Qs now, which is the ETF that tracks the NASDAQ 100. And let's look at a live chart of the Qs here. And the Qs are coming down. So this is stressing me out. All right, here we go. So the Qs are coming down super hard today as well. Lots and lots and lots of selling. Good news in the semiconductors isn't bringing up the NASDAQ. I would avoid any semiconductor stocks. Great news, good earnings, tanked, could bounce. Weird news, I stay out. And incidentally, one last thing is that strategy I was giving you, selling bear call spreads at resistance, would apply on the Qs as well. Look at the Qs at 440 right here. That is resistance, resistance, support, support, resistance. That would be a decent level to sell on the Qs as well. Maybe, and of course, higher is better than lower. So, you could also consider looking at 450, which is all-time high territory. But this is basically the lesson for today, is that, given the markets can look like they want to continue to slide, we could trade not up. Go ahead and slide more, make money, go sideways, and try to recover before the Fed. Doubt you will, and we make money. So it's one of my favorite applications of credit spreads. All right, guys and girls, I apologize for the internet problems. I've been working hard to get this line installed, and things move slowly here, and unfortunately, it's not installed yet. But next time I see you, we'll have really high-speed internet and fiber, and this won't happen again. All right, everybody, I wish you a great week. Follow your rules, get the guidebook. If you like the Hub channel, be sure to subscribe to it. It's a really great channel. We also have Rob and Jeff doing their thing. Really great stuff. Have a great week, everybody. We'll see you soon.